Good afternoon, guys. How are you doing? I hope you're well. Welcome to Wednesday, the 28th of July. Just as I speak, guys, we might have Boeing earnings in a couple of minutes. If we get them, one of the lads here will put it in the room and I'll go through those. But just as we're expecting those, here's the preview of Boeing data. Q2, the mean EPS of 1.013, sales looking for 16,192. An hour later we got ConocoPhillips, and I'll talk about that because I think it's going to be quite significant for the oil price. Guys, can I just check if you can hear me, and can you see my screen? Boeing EPS of $1.06, EPS of $1.06, okay, that beats the mean estimate, EPS of $1.06. That's the clean number. The guys will put that in the room. Okay guys, so let's have a review of yesterday. Let's have a look at the E-mini S&P, and looking at the pattern of this chart really does sum up the last, I would say, kind of 10 days that we've had in terms of market direction that we've had. So have a look at this. We were moving higher, good earnings, good sentiment out there in the market. We went up to hit a high of 11.1875, which is fantastic, and then we started to get rumours. We started to get rumours on the consumer confidence figure. If you have a look at the market, those rumours were coming in about 2:15, so quite a way ahead of the actual figure release coming in at 3:30. Sorry, coming in at 3. So about 45 minutes before the figure, we were getting rumours that consumer confidence was going to disappoint. Consumer confidence was going to be sub 50. Okay, the expected figure was 51, and you know, the US are desperate to have that confidence back in the market that's going to continue purchasing and buying and spending. That's what this market needs to sustain its recovery growth. Okay, so these figures do have a significant effect. Anyway, the actual figure came in at 50.4, so better than the rumours of sub 50, but worse than the 51 that was expected, and actually it was a 5-month low, and it created some choppy conditions here. So here the figure came out. This is where the figure came out on that 3 o'clock hour, and we initially had a spike higher because we had a relief rally. I managed to get a nice long on here, very short term, probably lasted about 15 seconds before I took it off because there was not a huge amount of momentum. It's quite strange trading conditions, and the reason being is that this figure was actually a 5-month low. Okay, it was actually a 5-month low in consumer confidence, which is a disaster. I was looking at some analysis this morning, however, and they were putting this consumer data into perspective. They were saying, listen, in the US, the consumer or the consumer's confidence is directly inversely correlated to the cost of filling up. It's quite anti-US, so I apologize for our American traders. It's directly inversely correlated to the cost of filling up your sports utility vehicles. Okay, when the Americans don't want to walk to the shops and they're taking their big tanks, it's a reminder of high prices at the petrol pump, and it acts as a constant depression, and there is pressure on petrol pump prices in the US at the moment, and that leads to a very quick lack of confidence by the consumer. They're constantly reminded, they're filling up all the time, it's a constant reminder that they perhaps have less money than they used to have. So anyway, the reaction of this figure, an initial relief rally, it was better than the rumour, and then a move to the downside, pretty much capped at 11.07, which if you look at our morning strategy today is our target entry point. Okay, what effect did this have on oil? Well, consumer confidence having a major effect on oil, really, and you can see what happened after that 3 o'clock data, following stocks sharply down. In fact, this was the biggest daily decline in the oil market since the 1st of July. So overall, markets were disappointed with this consumer report. Equities slipped, but there were positive earnings coming out, and also there was the Case-Shiller, more housing data that wasn't perhaps as negative as the market was expecting, and I think that capped any further slide to the downside. And you can see we're caught in within this slightly wide range, but again it's sideways movement for the market. So that was yesterday. I know a lot of you, saw that as perhaps as just one or two opportunities there, and then from about 4 o'clock onwards, it was really a bit of a chop zone. Coming in here, the gains capped at 11.13, and again 11.07 providing the bottom. What's happened today? Well, we've had a Portuguese bond auction. In fact, let's have a look at the euro to look at that more closely. Got this on a 35-minute. I'll change it to a 15. Okay, we've had a Portuguese bond auction, and that acted negatively on the euro initially. We're looking at the bid to cover, and it was 1.6 versus a previous of 2, and the yield slightly higher, 5.377 versus a previous of 4.41. It was given a rating of a C, and the euro did come off a bit, but oddly enough, the Portuguese versus German government Bund spread did tighten. So a bit of a mixed result there from the Portuguese auction, certainly not outright positive. I'd see it as negative, and the euro reacted to the downside as it was. We were getting gains to the upside before that auction. So I wouldn't say it was a successful auction, but they sold everything they needed to sell, so it certainly wasn't a disaster. We've had more housing data out today, and it was the US mortgage application, so the MBA figure that came out at midday. And that was negative, guys, minus 4.4% versus a previous 7.6%, and it's really just an indication that demand for housing at the moment is still very weak, given as the US, all the alternative quantitative easing measures they were providing the housing market in terms of support and funding, those incentives are being pulled off, and that is understandably having an effect on mortgage applications. Well, today, as you've seen, we've just had Boeing in the room. EPS 1.06 versus 1.03, so just again a limp better on the EPS. And the Q2, where's the revenue? 15.6 versus 16.34. This is following the trend of results that we've had. You can't say that these are particularly negative results because the EPS is good. The actual functioning and the slimline nature of the business is good. They're efficient, but the revenue, the reduction in revenue is a bit of a concern. We need increased revenues now to get us out of this recession, to continue the recovery. The firms can't keep on getting more and more efficient without the sales being there for it to do so. We've also got ConocoPhillips expected, as I mentioned, at 130. That I think could provide a driver for the oil price. We've got an EPS mean, QT mean of 1.562. We've got durable goods coming out later, guys, today, and I think this could have quite a directional sway with stocks as well. Durable goods, what is the demand? What is the atmosphere out like there? And then the big one, I think, is at 7 PM, which is the US Beige Book. And the reason why I think this is slightly large is this Beige Book focuses on small and medium-sized businesses, okay? And I think this is an area where a lot of major economic data fails to capture. And this is a recession that affects small and medium-sized businesses in the US, much more so than the large international enterprises. So I think it perhaps can give a more realistic of what's really going on in the US economy, certainly on Main Street. And as you'd expect, they're expecting to see momentum has slowed, but they're going to be looking for what evidence is there that might support or deny the recovery from continuing and going ahead. We had German CPI earlier this morning, guys. Really serves little purpose, inflation in the Eurozone, as really as an aggregate is very little. But just to bear in mind, the Germans are having a whale of a time when you actually look under the covers, because not only is there a large exporting economy and they're benefiting from the relatively cheap euro compared to times past, but also their CPI is hold on, because it came out, let me just get, their CPI is half of France, or it's 1/5 of Greece. So that means that in effect the Germans are gaining a competitive advantage over the other Eurozone countries. Effectively their currency is depreciating in real time.